Hey there, Kristen Walter with the Mountain Dream Team coming to you today to talk to you about the differences between an investment property and a second home or a vacation home. Stay tuned, I've got lots of questions that you're going to need to ask yourself before you even start the process. Hey there, I'm coming to you today from my vacation home. I get this question a lot. I wanted to answer it for you before you start to think about your planning for your taxes and your mortgages. Before we get started, make sure you hit the like button, make sure you hit the subscribe button, and leave any questions below that I can answer for you about resort, rural, real estate in Colorado. Okay, so I get this question a lot, and the quick answer on the difference between a second home and an investment property is really the mortgage rules and the IRS rules. Everything else besides that is just whatever you want to call it and just however you want to use it. So lenders and the IRS have certain requirements which are always changing. So before we go any farther, the lawyers want me to tell you, I'm not a tax accountant. I'm not a CPA. I don't work for the IRS. I'm not an expert in all of this. I just know from personal experience in the business, when people come to us to purchase a property in the resort market, they ask us if we know about the differences between a second home and an investment property. What I always say is, it depends on how you're going to use it. And that's exactly what the IRS and your tax accountant are going to say as well. So again, watch this video, get the broad strokes overview, but before you make any decisions, before you do any accounting, before you even call us to buy a property, call your accountant first, or call your lawyers, call your financial planners. But make sure you ask them these intelligent questions when you call them. So again, lenders and the IRS both have certain requirements based on how you're going to occupy the property and how you're going to file your taxes. The U.S. Census Bureau identifies second and vacation homes as seasonal, recreational, and occasional use properties. The IRS defines an investment property as property held for current income as well as a potential profit upon its sale. So a few questions you need to ask yourself. Do you plan to stay in your second home or your vacation home for more than 14 days a year? If so, then that is officially going to be, right now, per the rules right now, that's going to be your second home, your vacation home. If you're going to have owner use for 14 days or more, then when you call one of the lenders that we put you in touch with, you tell them it's going to be your second home. However, if you plan on renting it out when you're not using it, then again, that's a question for the CPA. Now, there's no rules in saying that you can't rent it out when you're not using it to offset some of your costs. The difference is going to be in what the lender wants to lend to you and what the IRS sees as your income and your write-offs. So for example, the rules are always changing depending on how you want to deduct your expenses. So again, if I have a second home, that's the kind of loan that I'm going to ask the lender for. If it's going to be strictly income, meaning that if I go to this property for less than 14 days each year, and I'm really just going out to check on it, to manage the maintenance people, to hire a new property manager, and I'm really not enjoying it, then I'm going to call the lender and I'm going to say, I want to get an investment loan. Now don't freak out about this, because investment loans right now are very competitive to second home loans. And so if you truly are just wanting a place to land for a week or two at a time, but you know you're going to have it on the short-term rental market for the whole rest of the year, then I think that's an honest use of an investment property. Because more than likely, when you visit that property for 7 to 13 days out of the year, a majority of that is probably you are going to be working on it. You're going to be hiring the property manager, seeing if it's got a lot of wear and tear, replacing the linens, replacing some furniture, the cutlery, all that kind of stuff. So when you're thinking about a second home loan versus an investment loan, don't freak out if the investment loan is going to be a little bit more expensive. Because the other thing to remember is if it truly is an investment and you are not having too much personal enjoyment, you are allowed to take a lot more deductions on that investment property than if, for example, it was just your second home. So again, I'm not an accountant. I am not a tax professional. I'm also not a mortgage lender, but I do know you have to follow all their rules. And I'm just trying to give you a general idea of the pluses and the minuses of doing it one way or the other. But if the intention is there that you're going to use it more than you rent it out, then it's a second home. If you really are going to rent it out and use it as, like, try to get a little bit of cash flow or try to offset your costs and have it be a long-term investment, then that's an investment property. So the other things that you're going to have to talk with your accountant about, and that you need to go ahead and take notes and ask them these questions specifically for the state of Colorado, are number one, the 14-day rental rule. Ask them how you're going to categorize property components. Ask them how they are going to set up your depreciation schedule. Ask them how you are going to calculate your yearly costs to recover your deductions. Ask them how to determine depreciation recapture and capital gain on a future sale. I talk about this in 1031 exchange videos. I'm going to have a bunch more experts come on in other videos about this topic as well as that capital gains issue. So make sure you go watch the 1031 video as well. The other thing to think about in the state of Colorado, even if it's your second home and you're from out of state, and especially if it's an investment property, is in the state of Colorado, if you're not a resident, when you sell the property, you are subject to a 2% tax on the sale of the home when you sell it, on the sale of the property. So you're going to need to ask your accountant to calculate for that 2% at closing when you sell it as well. And then if you are a foreign entity, meaning you are not an entity in the United States of America, then there is a tax on that too. We call it for short the FIRPTA tax, F-I-R-P-T-A. I'll put it up on the screen, the longhand version of what that means, but that's something that you're going to need to ask your accountant about. You're also going to need to ask them about passive, active, and material participation. Again, I kind of hit on these things. It's like, how much are you going to come out and use it? How much are you going to have personal use, personal enjoyment, versus you might never visit and it truly is going to be an investment property, as though you have an investment property in a major city with a long-term tenant. Another thing to consider, if you are going to have an investment property anywhere, especially though when you're calling us in the mountains of Colorado, is whether you want to own it inside your IRA. So if you have a Roth IRA, then you cannot have any personal use whatsoever if the property is inside your Roth IRA. Again, we'll do another video on Roth IRAs. This is really, I think, more applicable to people who are not purchasing a home that they're thinking about coming out and skiing in the winter and boating in the summer. But you can own an investment property inside your Roth IRA, your Roth IRA. It's just you can never have any personal use, and neither can anyone that you are related to. It has to be completely arm's length. So make sure that if you're going that route with an investment property, that you talk with your accountant about the very strict rules of owning a property inside your Roth IRA. It has wonderful tax benefits. Again, we'll do another video about that, but just make sure you talk with your accountant about it before you come talk to us. And the last thing to ask your accountant about is when it's time to refinance the property, either with your first home equity or retirement accounts or anything like that. So those are all things that you need to consider before coming to a vacation market and determining whether it's going to be a second home or an investment property for you. Now, the other thing that I think is sometimes obvious, but people forget when they come to see us in the mountains, is being a short-term landlord. Meaning, if you own a ski condo on the slopes, or you own a big giant mansion and you intend on having us help you find an excellent property manager to manage it, you're going to be a landlord for those vacationers. You're going to be a landlord for the VRBOs, the Airbnbs. You're going to be basically like a little hotel. And so if you're thinking of doing any of that sort of stuff, I know it's very tempting for you to think that you can do all of that property management yourself, and a lot of you can, but I also think it's important to think about the tax implications with the sales tax, licensing that you have to get for our local entities, the towns and the county, and also to think about if there's ever any type of emergency, who's gonna call. There's just so many things to think about if you're thinking about being a short-term vacation rental landlord that are way different if you're having a long-term tenant in one of your long-term investments. So when you're thinking about being a landlord in our area, in a vacation rental area, a lot of the work is going to be right up front. So not just with the tax planning and the IRS and all of that, but if you're going to hire a property manager, if you're going to have to think about check-in and check-out procedures, damage deposits, how are they going to pay you on time, how are you going to refund money, the cleaning fees. There's just so much that goes into having a short-term rental that I want you to think about before you call us. Really think about it. Talk with your family, talk with your loved ones, talk with the people who are going to be occupying this place with you, and ask them if they're going to be okay, and we're going to ask you this too. If we sell you a condo on the slopes, or we sell you a house, and you say to us you want to rent it out when no one is there, when you're not using it, or when your friends or family or your company, your corporation, your employees, when people aren't using it that you want to rent it out to offset your costs. The question I always ask people is, are you going to be okay when you show up to your place that you own and there's a little tiny hair on the pillow where you're about to sleep that is not yours? Are you going to be okay if you show up and you go to cook a meal in your kitchen and there's a scratch on one of your pots or pans or dishes? These types of things can really upset a person when they are trying to relax and be on vacation, and it's stuff you just don't think about. It's stuff that you just sort of take for granted. But some people don't think that the income is worth having strangers in their property when they're not there. That's just something to think about, again, on the emotional level of a second home versus an investment property. So what questions do you have for me? I know that a lot of stuff is out on the internet about this topic, and this was a really quick video. I tried to just break it down really quickly to get your brain working and get you thinking about the differences. But I'd love to hear some more questions on what I might have missed, knowing that I'm gonna have a whole other video about how to manage, how to find a good property manager, how to interview those property managers. We're gonna have a whole other video on that subject. But this one today is just really second home versus investment property. So let me know your questions down below. Let me know what other questions you have about owning a property in a rural resort market in Colorado. Okay, that's all I have for today. Thanks for watching. I'll see you in the mountains. Bye for now.